Hi guys, with me again with Cindy Himawan. So today's topic is about the financial and accounting in the enterprise. So we are going to discuss about what is the process in the financial for the enterprise. So let's start to see on the slide. Okay, so when we talk about the enterprise, the main prioritize or the main decision will be based on the result, whether the product is profitable or not. So it's mean all the decision, all the strategy that will be made by the enterprise will be based on the report or based on the financial report, because the financial report is the report that will show whether the enterprise is profitable or not. Okay, so it's mean the decision making, it say that the decision making will be difficult if we don't know anything about the financial information. Okay, so it means how to how an enterprise can decide the strategy if they don't know whether the current situation is uh, profitable or not. Just let's say, just let imagine that our, let's say the company is PNG. So in the PNG headquarter in US, let's say the boss, the number one boss, when he wants to make a decision, of course he wants to know first whether what is the current situation of the company, whether the company is profitable or not, whether how about the cost, how about the profit, is it going up or is it going down, what is the situation now. So it's mean the financial information will be the base, will be basic things that enterprise needs to know, uh, so the management level can take a good strategy. Okay, so now just imagine when we don't use any integrated system, it means that the logistic transaction and the financial transaction will be separated processly, right? So it's mean that just imagine that the salesperson will selling the products and it will be recorded separately, and then the inventory also will be maintained separately, also the manufacturing and the other things will be maintained separately. It means how to extract the whole report, how to extract the whole financial things if all the logistic transaction is maintained separately. That's why the idea of ERP, one of the basic idea why we need to use ERP is because we need to integrate it between the logistic transaction and the financial. So it means that whatever happened in the logistic transaction, then it should be appear automatically in the financial side. It's meant that there's no more uh, redundancy, or duplication data. It means that we don't need to, the financial department do not need to ask how many cells the sales department have, or how many stock the inventory have now, and how many costs that the manufacturing uh, acquire or whatever. So it seems like every time the transaction in the logistics side, then the financial department can get the report automatically. It means the financial department get the will get the information directly whenever there is a sales, whenever there is a goods movement, whenever there is a manufacturing cost, whenever there is a human labor cost, and whatever related to the cost and revenue, then the finance department will get automatically reporting. Okay, so what is the main problem that usually appear in the financial department before they not using any ERP? So the first problem is related to the credit management here. The credit management here is talking about how much the credit platform, or how much is the limitation that we give to the customer in terms of uh, their liabilities. So they can usually, when customer buy to our company, they can buy with the credit, right? So what is the maximum limit that we will give to the customer uh, before we block their order? So example, if they are keep doing credit and without payment, then it might cause our cash flow become stock, right? So it becomes stop. So we don't we cannot have we cannot have money. There's no money incoming, so it will cause the problem to our enterprise. So that's why we need to set a certain limitation on how much the customer can have liability to our company. But example, if we don't have any ERP, it means that the data is maintained separately. It means that when the finance department set certain limit, let's say we already limit the transaction is 1 million, but because it maintained separately, it means that we only can give that information manually to the sales department, right? So we only telling the sales department, hey guys, we have the limitation for this customer is only maximum 1 million. So if the customer liability already reach 1 million, then you need to tell them to pay first so they can continue their order. But because it's only like a manual thing, so it's possible that the sales department forget, or maybe they just uh, they just can intentionally forget. So it's possible that the limitation is like never give to the customer. But when we use the ERP, we already set in the system that the limitation is 1 million. So once the finance department set it, so the sales department, whenever there's a customer liabilities, then the system will calculate automatically how much the current liability, and the system will telling the sales department that, hey guys, this customer is already reach their limit, so this customer basically needs to pay first before they can go to this next order. Okay, so that's the example of having integrated in the credit management thing. And then when we talk about the product profitability, it's the same things, like when we need to calculate how much is our exact profit. It means that we need to calculate how much revenue that we get from the whole product that we have now. And talking about not just imagine that our company is having a global company for this global position. It's mean that our company distribute in many countries. So can you imagine if we go back to the example for our PNG company? So how the number one boss, the he can know that how much is the current profitability of the company for the whole countries. So it's not only in US but also in Asia, in also in Europe and so on. So how he can know what is the exact profitability, because in order to get the profitability, the company needs to know how much the revenue and also know how much is the expense, right? And not only talking about in one country but also in the whole world, PNG need to know whether the PNG is profitability or not. So it's mean that if we are not using any ERP, then the data is maintained separately. So by the time we want to extract the financial report, then it might be very troublesome because we need to collect the data from many countries. Okay, so it might be very difficult, and there is a possibility that the data will not accurate. Okay, the same things when we talk about how much the goods inventory that we have now, how much the costing about the our inventory, and then the information from subsidiaries. It's mean that the subsidiaries here is talking about the our company branch, or uh, like what like what I explained just now, like example that PNG having many branch in many countries. So that's how we can consolidate that information accurately and real time. So it's mean by the time I click the financial report, then by that time also I can know the financial report in the whole world. And then talking about the management reporting, it's been when we can do the analysis, when we're not only know about whether our company is profit or not, but we can do the profitability analysis using that using the information, using the financial. Later I will explain to you about what is the difference between the finance and the accounting. Okay, and then we are also talking about the creating the audit trail here, because the audit trail is something that important in the finance things. We need to ensure that there's no data changes by unresponsible person. So it's mean that the data between the quantity and the price should be tally, should be the same. So if let's say we sell the product for one pieces is $10, it means when the customer buying 100 pieces, so the revenue should be $1,000, because between the quantity, the price, and the revenue cannot be cannot be changed separately, because it's already integrated. And once the data tamper, or once the data changed by some people, then we can trace it back. Okay, so without having ERP, so it will be difficult for us to trace back whether the quantity changed, or whether the price changed, or what kind of changes that uh, the data tamper. So by having ERP, we can know exactly what is the data change, when the data change, and also who is changed the data. Okay, so when we talk about the financial or accounting, we can see that there are some business process. So basically the finance accounting will okay, so basically finance accounting is a basic basic configuration that you need to do, because the whole business process that happen in a company will be pulled in the finance, right? So every logistic transaction, uh, every process that we done in the enterprise basically will be collected into the financial. So we see here when we talk about the customer, and then the customer will be having the orders, then the accounting will need to track it, because the accounting needs to know how much is the order from the customer, and then the accounting also needs to check how much is the account receivable. It means how much is the customer liability to our company. And then when we talk about the purchasing things about the supplier, then we need to be able how much we owe to the supplier, or how much is account payable. And then when we talk about the human resource, then we need to know how much payroll that we need to pay to our employee. And then when we talk about the inventory, we need to know how much asset that we have now, and how much cash that we have now, and everything. So all the things that happen in the company actually will be pulled later, or will be report in the accounting process, and later on will be analyzed by the management. Okay, so first when we talk about the financial process, okay, so just now I said that actually in the financial thing we have financial process and we have accounting process. So when we talk about the financial process, actually we're talking about the operational things. We're talking about how to link the operational, or how to link the logistic side into financial. It's mean that actually it will be when we talk about when we have the incoming order from the customer, and we will have the cash or the revenue coming, then uh, when we talk in the logistic side, they concern about the quantity, right? How many they sell in quantity. But when we talk about the financial, it means that we need to know what is the value of that quantity, right? It means that uh, we should have the integration between the logistics side, between the sales department here into the finance here. It means that we need to see how much is the cash management here. uh, it means that we need to with the system will calculate how much the quantity, multiply with the price, and then it will be reported in the cash management. So the finance know how much the revenue we get. And then when we are talking about the purchasing side here, it means that we need to know how much we buy from the vendor, how much we buy from the supplier, how much we need to pay, or how much we owe, or how much is our account payable. And because that liability will be goes into the financial process, financial report also. Okay, so basically for the operational things, it will be consist of the asset management. It means uh, we need to know not only how many pieces of inventory that we have, but also how many value that we have for that pieces. Okay, so example that we have 10 box of mineral water. The logistic part is concerned about the 10 box, okay, the quantity. But when we're talking about the financial, so the financial needs to know how much the value of that 10 box. So if example that 10 box, let's say one box value is 1000, it means if we have 10 box, then the value is 10,000. Okay, so that's what we call it the asset management. And then when the financial process also talking about the treasury management, where the treasury here will be uh, handle the asset in terms of land, building, machine, and then there's an inventory management. We need to know how much our inventory in, how much inventory out in terms of the, again, in terms of the value, not the quantity but the value. And then we also need to know in the financial process about the manufacturing cost, because we need to know how much expense, how much exact expense that we use during the manufacturing things. And then it will also link to the HRM or human resource, because we need to calculate how much the payroll, how much the overtime that we need to pay, and how much like the claim, the medical reimburse from the employee that we need to pay to the employee. Okay, so now there are several in the, sorry, in the financial operation there are several reporting that will be used. Okay, and before we can produce that uh, reports, then we need to we need to maintain what we call with the charts of account. So the chart of account is actually the master data that we will use in the financial processing. So the chart of account is actually is a data which lists all the names of the accounts that will be used in the company. The account here is talking about the account that will be reported in the general ledger. Okay, so if you still remember when maybe if you ever learn about the accounting before, so in the accounting there will be a general ledger, jurnal umum, and then inside that general ledger will be several account, akun-akun ya. Akunnya bisa yang biasanya bisa 5 kode, yang 1105 kas, 1105 berapa itu bank misalnya gitu ya. That is the account. Okay, so when we talk about the chart of account, there are 5 big groups of chart of account. Okay, the first group is what we call with the asset. So the asset here uh, will consist of the current asset. The current asset here is like the cash, bank, inventory, and then investment here is talking about like maybe the deposito that we have, and then talking about the land, talking about the uh, building. And so the investment here, the investment and the property. Okay, so uh, when we talk about the property, that it can be used like a land, investment in physical things that you can see. So the property here talking about the land, building that just now I said. But when we're talking about the investment, usually the investment in terms of the intangible things, some things like the deposito, saham, atau apa, asuransi itu juga bisa kita sebut sebagai investment ya. And then when we talking about the contra asset, the contra asset here is talking about the depreciation things. So let's say you have the property asset, then it might have the contra asset. The contra asset can be can have the value positive, can have the negative value also. Let's say when we're talking about the machine or car, then there we have depreciation asset. Okay, so let's say you buy the car 1 million or 1 million, but then in the next year the value will be depreciated because the value of the car also deduct it, reduce it, right? But also it can be positive. Example, you buy a land or you buy a building, then it's possible that when, let's say, you buy this year is 1 million, but then you will have a revaluation class whereby the value is increasing, because for the land the value can be increased. It's not like the car that the value can be decreased. And then when we're talking about the intangible, so I need to correct my statement before. The My statement before is I say investment in the intangible things. What I mean with that intangible in the investment is like, okay, so when you invest your money into something that not physical things, okay, that's what we call with investment. But when you invest your money into buying some physical things like land or building, that will be included in the property. But when, let's say, you invest your money in the saham deposito, okay, uh, reksadana, so that's what we call it, the investment. So that's why I say intangible. But actually we also have the intangible assets, something that really you cannot see that as a money, because kalau saham itu kan bisa diuangkan gitu ya, kalau deposito memang bentuknya juga uang. But when we talk about the intangibles, actually it's really something that something like haki. Haki itu hak cipta, license gitu ya, royalty, something yang kayak pemegang pemegang hak paten itu royalty ya. Some example like when our company is pharmaceutical, perusahaan obat ya, manufacturing obat, then we have the royalty, kita punya hak cipta atau hak paten terhadap obat tersebut, then we can put that also into our intangible asset. Okay, even though that's not is our focus on this discussion, okay, jadi nggak usah terlalu pusing gitu dengan intangible things here, because that will be that is not our focus in this accounting, so you can just ignore it or just put as your information only. And then the second group is the liability. The liability will be differentiate between the current liability and the long-term liability. The current liability is related to the amount that you need to pay in the usually in a year term. Okay, so let's say when you buy credit to a supplier or vendor, then it will goes to account payable, and that account payable is actually under the group current liabilities. But let's say when you buy a building where you need to pay in 10 years time, that and so that credit will be goes to the long term liabilities. Okay, and then the third group is talking about the equity. Equity is talking about how much we own. Okay, so how much things that we own. So it can be consist of the owner equity, modal ya, modal yang kita keluarkan itu kita bisa sebut sebagai owner equity, or the equity also can be calculated from the profit and loss that we get every year. Okay, so when we talk about so if you see here, the first, second, and third group, okay, the first three group will goes into the balance sheet report, okay, and then the fourth, which is revenue. So the revenue here is talking about the primary and secondary revenue that we have. So the primary revenue is taking from the when we selling our product. And the secondary revenue is talking about, let's say we sell our land, we sell our car, we sell our machine, so that can be considered as our secondary revenue. And then we also can get some gains here. Uh, let's say when we have saham gitu, ternyata sahamnya naik, nilai tukarnya naik gitu, the exchange rate naik atau sebagainya, itu we call it as a gains. And then we also have the fifth group we call as an expense. The expense here means that how much uh, we we need to pay in terms of cost in order to do the primary. The primary here is talking about the like the direct costs when we do the manufacturing or the inventory things. The secondary cost or the secondary expense can be used like for labor, for electricity, so that is like usually we call it as a variable cost. And then we can also put another losses like tadi contohnya kalau sahamnya naik, so we can call it as a gains, but when we uh, sahamnya turun atau nilai tukar dolarnya turun, so we can call it as losses. So if you see here, the fourth and the fifth group will goes into the profit and loss, or what we call with the income statement. Okay, so that is the chart of account. So later on we will need to know what kind of account that be used in the enterprise. Jadi dalam enterprise ini akan punya account apa aja? Apakah dia akan punya punya cash, punya banknya itu punya apa aja? How many bank account that they have? If they have Mandiri, BCA, and so on, then means that they will have a three account. If they only have one bank account, so we only need one bank account. If they have the inventory, like if they have finished goods inventory, if they want to track it, if they want to track the inventory finished goods, the raw material finished goods, the raw material inventory or the semi finished goods inventory, then there will be a three account of inventory. So basically the chart of account from one company and another company could be different. Okay, so that's why you need to check on what is the chart account needed by your own company. Okay, and how to decide that is actually usually is talking with the owner or talking with the financial department to know what kind of account they need. Okay, example like for the revenue, it's possible if let's say they never have any secondary revenue, let's say they never sell any machine, they never sell any land, so of course we only need to set up only primary revenue. But let's say for even for their primary revenue, let's say they can separate it, they can differentiate it. Let's say the revenue can be differentiated into export revenue and local revenue. Or maybe they want to see again the revenue based on the product. It's possible, let's say they have product ABC, so they want to see revenue A, revenue B, and revenue C. It's possible. So the differentiate account of the revenue can be different from one company to another company. It will be depend on their needs. So you can discuss with your group. You can define what kind of revenue account that you need, that you think it's suitable with your company. Maybe you can browse. It's good if the company can already publish their financial reports, so you can just follow whatever they define. but it's also okay if you want to define by yourself. So you can discuss and decide what kind of revenue account that the company will have, and what kind of expense that company also will have. Example, they might have the expense of COGS, the cost of goods sold. That is a must, but it's possible that they might need to calculate like the electricity, the salary, and it's sometimes the company also need to split within the salary, the main salary expense and the overtime expense, because they want to know like uh, they want to know how much they pay for the basic salary and how much they need to pay in the overtime expense. Okay, why they need to know that? Because by knowing that amount, it's mean you can do some analysis, right? Can you imagine if, let's say, in the company, the overtime expense is higher than the salary expense? By right, the salary should be higher than the overtime, right? Because the overtime should be is only occasionally, only happen when it needed. But if the overtime cost is bigger than the salary expense, then it's mean better the if we hire more employee, right? So instead of having a high overtime expense, then we can have a stable salary expense, something like that. So it means please decide also with your group, discuss what kind of expense that is possible appear in the company. Okay, so let's go to the financial statement. The first financial statement that will be very important is what we call with the profit and loss, or sometimes we call with the P&L or income statement. So the income statement will be shown like this. There is a revenue, there is an expense, and then we will know our profit, whether we are profit or we lost. Okay, so basically we just deducted the revenue and the expense, and then we know what is the result. So what is the purpose of the financial stat of what is the purpose of the income statement? Is the first one, of course, to know our revenue and our expense, so we know how much is our revenue and how much is our expense. Without knowing this, that of course we cannot calculate our profit. And so basically the income statement is to know whether our business is profitable or not. If we don't know uh, whether our company is profit or not, then how you want to going forward, right? So that's why we need to know first whether our company is profitable. If it's profitable, then we can go on. But if not profitable, then what is the strategy? So the next things that we can decide from this profit and loss is actually when you look into this report. Okay, so if I'm asking you how to make the profit getting higher, so there will be two strategy, right? The first strategy is to increase the revenue. Let's say if our revenue become 200, it's mean our income also getting higher. The second strategy is to lower the expense. So the expense here, instead of 90,000, so let's say we make it into 70,000. So of course our profit also can be increasing. So if you see here, it means that by knowing the income statement, we can get the strategy whether do we need to increase the revenue or do we need to decrease the expense. Okay, So uh, please think about the, you know, what is the strategy that using by a company. Please think about the example of the company strategy when they increase the revenue and when they decrease the expense. Okay, I will ask you later during the discussion. Thanks. Yeah. So the third purpose is to show the ability to use, borrow, and invest in funds. It's mean that the creditor or the bank will wants to see this income statement because they want to see whether the company is profitable or not, and whether the money that the company borrow can be used to get the profit or not. If let's say they buy, if let's say uh, if let's say I want to borrow the money, but then if my if my company keep loss, then how I can pay back to the bank, right? So that's why the bank will see this income statement and see whether the company profitable, so the company able to pay the uh, the amount that they borrow.